Today we talk about physical versus virtual gold. First of all, there are 4 main ways how to invest in gold or gain exposure to gold market. They all come with different levels of risk, cost, and ownership. The first and most traditional way is physical gold. That means gold bars or coins that you actually own. If you hold it yourself or store it in a vault under your name, it's called allocated gold. That means it's legally yours, like a car registered to your name. If you keep it at home or your hiding place, it's yours. If you hold it in a vault, it has its own serial number, purity, and weight. What's the benefit? No third-party risk. If banks or institutions fail, the gold is still yours. For example, during the 2008 financial crisis, Lehman Brothers collapsed. They were one of the banks managing virtual gold. That time, government bailed out the system. But next time, you might not be so lucky. Sure, physical gold can be a bit more expensive, but it's the safest form of gold ownership. You have full control over your gold and you have no counterparty risk. Second option, gold exchange traded funds, in short, ETFs. ETFs are the most popular way of investing into virtual gold. You can buy it through your brokerage account. So what's the catch? The gold that the ETF owns is allocated to the fund's name, which means fund is owning the gold. But the gold is not allocated to your name, so you are not owning the gold. You own shares in the fund. If the fund or custodians that hold funds gold, do I have to explain who are custodians? You can just translate it into Latvian, like the banks that hold gold for ETFs. If the fund or custodians face insolvency, you don't have the right to claim the physical gold. Think of it like this. If you own a physical gold, it's like a car in your garage. If you own a gold ETF, it's like owning a share in a company that owns cars. Of course, ETFs are a bit cheaper, but they come with the counterparty risk and no true ownership of gold. In terms of costs, if you look at the biggest brokerage houses, owning virtual gold for like 3, 4, 5 years is cheaper than physical gold. But if you go longer than that, like 5, 6, 7 years, then physical gold actually becomes less expensive. The main reason behind it is that gold ETFs take a percentage of your investment every year. But for physical gold, you only pay the premium in the beginning if you buy the gold. Third way you can gain exposure to gold are futures, options, and other derivatives. These are paper contracts that let you speculate on gold price, often with leverage. They are mainly used by professionals and traders, not long-term investors. And these contracts are not fully backed by gold. Estimates differ, but there are around 50 to 200 times more paper gold than there is physical gold. So these contracts are high risk and no true ownership. They are mainly used like this, that you loan like 10 times of your money and then invest into the paper contract that gives you the leverage. If you don't have years of experience on financial markets, don't touch them. And the fourth way are gold mining stocks. These are shares of companies that mine gold. You can say that they are like gold on steroids. If the gold price moves 1%, mining stocks can move like 2 to 4%. If the gold drops, the same happens, but to the opposite direction. So this means mining stocks are more risky. Mining companies are affected by many other factors, not only gold price. For example, management quality, local politics, regulation, energy costs, and depth levels. So you can say that gold miners are leveraged bet on the gold price with added business risk. But for experienced investors, they can offer strong upside in the rising gold market. I own both. I own physical gold and I also own some of the mining stocks. But I have never invested into any virtual form of gold like ETFs or futures. To sum it up, physical gold has slightly higher costs, but it gives you real ownership and low risk. Virtual gold is a bit cheaper short term, but you own paper, not metal itself. Only physical gold will protect you from systemic risks. In the end, physical gold is what truly matters. And I like the saying, if you don't hold it, you don't own it.